With the emergence and exodus of financial management, from cash to electronic banking and electronic wallets, we have numerous ways now to transact, purchase, and to deal with financially. We have three types of currencies or monetary systems now. Fiat money is the legal tender declared by the government as the medium of exchange. This is the most common one, like the peso in the Philippines or the US dollar in the United States. Commodity money is another one, where it got its value from which the commodity is made, such as gold, silver, or diamond. During the ancient times, even rice grains, teas, or peppercorns were used as commodity money due to its value. Representative money is a representation article of either of the two, like banknotes, stock certificates, or like the most used bank checks. With the emergence of technology and the continued development today, financial transactions are now gearing towards electronically. It is safe to some extent, does not require physical interactions, is somehow cheap, and most of all, it is a real-time transaction. The concept of cryptocurrency was developed by David Chaum in 1983 and called it eCash, conceived as anonymous cryptographic electronic money, allowing the digital currency to be untraceable by the government, central authority, or any third party. It was used as a micropayment by Mark Twain Bank in Missouri from 1995 to 1998. Then, in 2008, Bitcoin was born. Satoshi Nakamoto, a pseudonym, devised the first blockchain database and was the first to solve the double spending problem for digital currency using a peer-to-peer network. A blockchain is an unregulated, distributed digital ledger consisting of records called blocks that is used to record transactions within the peer-to-peer network so that it cannot be altered retroactively without the alteration of the subsequent blocks, making it impossible for fraud and eliminating the risk. With this, a blockchain has been described as a value exchange protocol. Blockchain mining, a peer-to-peer computer process, is used to secure and verify Bitcoin transactions. Mining involves blockchain miners who add Bitcoin transaction data to Bitcoin's global public ledger of past transactions. In the ledgers, blocks are secured by blockchain miners and are connected to each other, forming a chain. Bitcoin miners solve mathematical problems and confirm the legitimacy of a transaction, and they are rewarded for doing so. This process of adding blocks to the blockchain is how transactions are processed and how money moves around securely on Bitcoins. Bitcoin must be the biggest cryptocurrency now, but it is not the only one. Some of these high-value cryptocurrencies include Ethereum, Litecoin, Cardano, Polkadot, Bitcoin Cash, Stellar, Chainlink Binance Coin, Tether, Monero, and the Elon Musk-backed Dogecoin. Although Bitcoin is frequently referred to as new, it has existed since 2009, and the technology upon which it is founded has far older origins. Indeed, if you had invested $1,000 in Bitcoin in 2011, the year it became publicly available, you would currently be worth $43.5 million. 1998 to 2009, pre-Bitcoin era. Despite Bitcoin being the first official cryptocurrency, prior attempts had been made to create online currencies with encrypted ledgers. B-Money and BitGold are two instances of these concepts that were conceived but never completely realized. 2008, Mr. Nakamoto's mysterious origins. Bitcoin, a peer-to-peer electronic cash system, was submitted to a cryptography mailing list debate. It was released by someone claiming to be Satoshi Nakamoto, whose true identity remains unknown to this day. 2009, Bitcoin is launched. For the first time, the Bitcoin software is made publicly available, and mining, the process through which new Bitcoins are produced and transactions are recorded and confirmed on the blockchain, commences. 2010, for the first time, Bitcoin is valued. Due to the fact that the nascent cryptocurrency had never been exchanged, just mined, it was impossible to assign a monetary value to its units. In 2010, someone sold 10,000 of them for the first time, exchanging them for 2 pizzas. If the buyer had retained those bitcoins, they would be worth more than $100 million at today's values. 2011, the emergence of competing cryptocurrencies. As Bitcoin's popularity rises and the concept of decentralized, encrypted currency gains traction, the first rival cryptocurrencies emerge. These are commonly referred to as altcoins and typically attempt to improve upon the original Bitcoin concept by providing increased speed, privacy, or some other benefit. Namecoin and Litecoin were among the first to appear. There are already over 1,000 cryptocurrencies in circulation, with new ones forming on a regular basis. Bitcoin's price plummets in 2013. Shortly after the price of a single Bitcoin exceeds $1,000 for the first time, it rapidly declines. Many investors will have lost money at this time as the price dropped to approximately $300. Scams and theft in 2014. Perhaps predictably for a currency meant to promote anonymity and decentralization, Bitcoin has proven to be an appealing and profitable target for thieves. Mt. the world's largest Bitcoin exchange, went down in January 2014, and the owners of 850,000 Bitcoins never saw them again. Investigations are still ongoing to determine precisely what occurred, but whatever the tale is, someone dishonestly obtained a haul worth $450 million at the time. Those lost coins would be worth $4.4 billion at today's values. 2016, Ethereum and initial coin offerings. This year, one cryptocurrency came dangerously close to stealing Bitcoin's thunder. As enthusiasm for the Ethereum platform increased, this platform makes use of the cryptocurrency Ether to enable the creation of blockchain-based smart contracts and applications. Initial coin offerings heralded Ethereum's arrival. These are crowdfunding platforms that let investors to exchange what are sometimes referred to as stocks, or shares in startup businesses in the same way that they can invest in and trade bitcoins. Bitcoin achieves a value of $10,000 in 2017 and continues to climb. A steady expansion of the locations where Bitcoin may be spent aided in its continuing popularity rise during a period when its value stayed below prior heights. Gradually, as new applications became apparent, it became evident that more money was coming into the Bitcoin and cryptocoin ecosystems. During this time span, the market capitalization of all crypto coins increased from $11 billion to nearly $300 billion. Meanwhile, Bitcoin's underlying technology, blockchain, has spurred a revolution in the finance sector. Gold was the primary safe haven asset for hundreds of years, whereas Bitcoin was established barely over a decade ago. Therefore, why are we even debating which is better, gold or Bitcoin? As Bitcoin continues its spectacular climb, breaking new milestones and surpassing the 1 trillion market capitalization barrier in the last week alone, more investors are reconsidering the long-standing comparison between the renowned cryptocurrency and the equally famous asset class gold. Both assets, according to experts, are frequently used to diversify portfolios or as a hedge against fiat currency inflation caused by what some observers believe are unsustainable fiscal and monetary policies. Taking a closer look at the two popular assets, along with oil and the Dow Jones, which are also valuable assets, and comparing them, it is clear that Bitcoin is the victor, with a 294.3% increase in value, having tripled in value during 2020, demonstrating consistent growth even during the stock market's severe decline due to the COVID-19 pandemic. It can be seen that it eventually recovered, surpassing the record high of $20,000 in late November. Very quickly, the cryptocurrency demonstrated that the possibilities are endless, gaining 50% in December alone, clearly outperforming the other three assets. As Bitcoin's rapid rise continues, more investors are reconsidering the long-standing analogy between Bitcoin and gold. Market Insider, a Business Insider stock market portal, polled 10 experts to determine which asset they would like to keep for the next 10 years and why. Both assets were picked evenly, with 5 experts favoring gold. Gold has traditionally been regarded as the preferred safe haven asset, and these 5 experts think it has maintained and will maintain its worth throughout generations. Gold's history as a fundamental building element of global money dates back 5,000 years and has been time-tested, implying that cryptocurrency is an inadequate monetary alternative. The remaining five experts, on the other hand, prefer Bitcoin. Although Bitcoin has increased by hundreds of percent in recent months, they are confident that it will continue to appreciate in the coming years and will eventually surpass gold's market capitalization. On platforms, Bitcoin and other digital currencies may be readily traded. This asset's liquidity, simplicity of exchange, and widespread use in the modern economy are only a few of its key assets. As a result, they predict Bitcoin will eventually become a mainstream asset class. Where you invest has a significant influence on your long-term earning potential, so it's critical to make the proper choices. While you cannot predict future success, it is instructive to examine how various assets have performed over time. Cryptocurrency enthusiasts are eager to point out the space's huge advances in recent months. Significant digital currencies such as Bitcoin have increased in value by orders of magnitude during the last several months. However, traditional investors are likely to exhibit greater prudence when it comes to digital currency investments. Some of the world's most prominent investors have cautioned that digital currencies are nothing more than a passing fad. Now that 2020 has gone, we can examine how Bitcoin, stocks, and gold did in comparison to one another throughout the time period. Analyzing the 2020 to 2021 data through the self-made USD value change comparison and attempting to address the issue that everyone appears to be discussing, how much did these assets truly earn throughout these years? We have an obvious winner here. Bitcoin has increased by almost 300%, whereas gold has increased by only 23%. When comparing the three, we should pay special attention to their individual performances. On the third day of 2021, Bitcoin, the world's most popular cryptocurrency, soared to a new all-time high of $34,000 on the occasion of its 12th birthday. Bitcoin gained over $4,000 in less than 24 hours after passing the $30,000 barrier. Despite a loss in March due to the coronavirus pandemic, it recovered, surpassing the historical level of $20,000 towards the end of November. Additionally, many people have been investing in the stock market for a lengthy period of time. The restrictions for buying in equities have remained unchanged over the last year as a result of the COVID-19 pandemic. There has been little variation in the proportion of its worth, with the biggest rise being 6.61% and the lowest drop being 1.13%. While investors can continue to acquire shares in the serving firms, they must demonstrate patience and the willingness to take calculated risk in order to develop a long-term successful strategy. Finally, because gold is frequently chosen as a significant safe haven asset during times of economic instability, the price of gold has always reflected the status of the global economy. While the global economy has been recovering from the effects of a pandemic, government's enormous stimulus will ultimately wear off. Gold began 2021 at approximately $1,866, only 5% below the all-time high of $1,969 set in August 2020. Bitcoin may be the future of investment, but research is still needed.